Everyone, and thank you for joining us. So today, this is the Financial Intelligence Center. My name is Michael Campbell-Atkins. I work in the Guidance and Outreach department at the FIC. And today we are going to be discussing the key FIC Act obligations. FIC Act, of course, being Financial Intelligence Center Act. And the focus of today's event is for crypto asset service providers. Okay, so before we jump in, I'm going to be joined by two of my colleagues, Victoria Nsana and Kulani Ngobeni. So I'll be starting the sections today, and then we will be transferring them a little bit later. So with regards to some ground rules, please can you complete the attendance register? The slides will be provided to everyone that completes the attendance register, so the link for which should be posted shortly. And if you do have any questions, please do not hesitate to submit a question via the Q&A function. Okay, let us begin. So ultimately, CASPs, or crypto asset service providers, they are an accountable institution in terms of item 22 of Schedule 1. And a CASP is a person that carries on the business of one or more of the following activities or operations on behalf of a client. So exchanging a crypto asset for a fiat currency or vice versa, exchanging one form of crypto asset for another, conducting a transaction that transfers a crypto asset from one crypto asset address or account to another, exchanging a crypto asset for a fiat currency or vice versa, or exchanging a crypto asset for a fiat currency or vice versa. So ultimately, we will be discussing registration in a bit more detail soon. But keep in mind that should you provide one of these services or should you sell one of these products, then ultimately you need to be registered as a CASP in terms of item 22 of Schedule 1. Okay, so the FIC published Public Compliance Communication 57. So if I say PCC for the rest of today, I'm referring to the Public Compliance Communications. These are guidance products that are published by the FIC. So ultimately, the guidance product for crypto asset service providers is PCC 57. So ultimately, crypto assets are vulnerable to abuse by criminals due to the ease of cross-border use, pseudonymous nature of ownership of crypto assets, ability to transact in a non-face-to-face manner, and enables anonymous funding. So we have received questions in the past. Why are we referring to crypto assets as being pseudonymous? It is ultimately because it is not completely anonymous. There is still a hashtag, there's still an IP address that can link back to the person that is transacting. That's why it is almost anonymous, but it's not quite. Okay, so some principles when interpreting or applying the CASP definition. You are considered to be a CASP if you are providing that activity or that operation, one of the 5 that we mentioned a little bit earlier. The use of a particular technology does not make a person a CASP. So particularly in this space, if you provide the technology, for example, for a platform of a CASP, then it doesn't mean the person that is providing that technology or ultimately fixing that platform itself doesn't mean that they are automatically an accountable institution, that they are a CASP. It is more to do with actually providing that specific service. Okay, so just in general, I promise we're not going to be going through all of these obligations today. We're going to be focusing on specific ones, but ultimately these are the compliance obligations that accountable institutions are required to comply with in terms of the Financial Intelligence Center Act. So that is the risk-based approach. So accountable institutions are required to apply a risk-based approach to when conducting their business. So targeted financial sanctions accountable institutions are required to screen their clients. Customer due diligence and beneficial ownership. Accountable institutions, are required to identify and verify their customers, and beneficial ownership, which maybe doesn't quite come up so often in this sector, but you are required to identify the beneficial owner when your client is a legal person, trust, or partnership. Politically exposed persons and prominent influential persons, you're required to determine whether your customer is a domestic politically exposed person or a foreign politically exposed person. And prominent influential persons is of course one of the categories in terms of Schedule 3C. So that is the new category that was added by the General Laws Amendment Act. So account and transaction monitoring and reporting. So that aspect we're going to be focusing on quite a bit today. Training. So training is training your employees with regards to ultimately FIC Act obligations and your RMCP, but we won't be going into too much detail with regards to that. Governance. So we'll also be covering that topic today. Registration on GoAML. It is, in fact, one of the very first steps with regards to FIC Act obligations. So you need to register on GoAML. That is the platform that the FIC uses with regards to the FIC Act. So risk management and compliance program, we're going to be focusing on that quite a bit today. Screening of employees for integrity and competency in terms of Directive 8, and risk and compliance return in terms of Directive 7 and Directive 6. So screening of employees for integrity and competency, it's ultimately to ensure that you are not hiring employees that are possibly previously involved in illicit financial activities, for example, and to make sure that organized crime is not entering financial markets through accountable institutions. But we won't really be focusing on that today. For more information in that regard, please refer to Directive 8. And there's also PCC 55, which explains Directive 8 in a bit more detail. Okay, so with regards to registration, going to be starting from the top. So in terms of Section 43B of the Financial Intelligence Center Act, all accountable institutions listed in terms of Schedule 1 are required to register with the Financial Intelligence Center. So ultimately, if you are a CASP, that is in terms of Item 22 of Schedule 1, you will need to register on GoAML and comply with the Financial Intelligence Center Act. So ultimately, in terms of Directive 4, registration must take place on FIC's registration and reporting platform, which is GoAML. So how would you find it? You ultimately go to www.fic.gov.za and you click on register or report. The link is on the right-hand side. So ultimately, you need to be registered before you can submit reports on GoAML. Okay, so how would you access GoAML? You would click on the link as I mentioned. Ultimately, you need to register, complete your details, and ultimately, always when you are registering, remember to keep in mind that you attach a certified ID of the compliance officer and you attach an authorization letter. So what quite often happens is the institution applying for registration, they forget to attach their authorization letter and ID, and their registration gets rejected. So always make sure that ultimately you attach the ID of the compliance officer and the authorization letter. One other thing in that regard, so with regards to the email address, do keep in mind that each email address must be unique for that specific institution. And I would recommend that you ultimately use the email address of the compliance officer. So what often happens is a random arbitrary email address is used, and do keep in mind the FIC communicates with the compliance officers using that email address. So we are quite active with our accountable institutions we quite often send our communications, so do keep in mind that you have regular access to your email address. We'll also be discussing a bit more information a little bit later with regards to the dashboard and so forth, but when you're registered, also recommend that you visit your dashboard regularly. Okay, so dual registration on GoAML. So this is quite a few words here, but ultimately, if you provide more than one service or product, you are required to register for both of those specific schedule items. So for example, for CASPs, when it was determined by the Financial Sector Conduct Authority, by FISCA, that crypto assets are in fact a financial product, then crypto asset service providers, CASPs, were required to register as an item 22 on GoML and as an item 12 if they are providing that financial product or financial services in relation to crypto assets. So if you are, for example, just to follow on with regards to that, for each registration, you could perhaps register just to indicate that specific schedule item you're registering under. So, for example, if you are already registered as an item 22, when you are registering as an item 12, you can put your institution name and then put in brackets FSP, for example, just to differentiate between the two. And then, of course, you would select that specific item 12. So each time you register under a new schedule item, you need to repeat the registration process on GoAML. With regards to delegation, please keep in mind that you need to register those institutions first, and then once they have been approved, then you can put in place the delegation structure. But we're not going to go into too much detail with regards to delegation, but ultimately you would complete a specific templates in that regard that the FIC can provide for you. But that would be for the larger institutions with several different accountable institutions or schedule items rather being registered under their company. Okay, so with regards to the RMCP and the documentation of the RMCP, so in terms of section 42.1, 42.2, and 42.2a of the FIC Act, it ultimately indicates what must be included in the RMCP. But ultimately, they can be broken down into three different parts. So the first one is the identification and the assessment of the risk of the accountable institution faces for being abused for money laundering, terrorist financing, and proliferation financing. I see we didn't discuss with regards to the acronyms, and unfortunately, the acronyms are certainly a big aspect of this industry. So if I refer to MLTFPF, I'm referring to money laundering, terrorist financing, and proliferation financing. I should have covered that in the beginning, I apologize. But ultimately, that is what the FIC is aiming to ultimately combat and regulate, is money laundering, terrorist financing, and proliferation financing. Okay, so ultimately the risk-based approach, assessment, methodology framework, entity products and service offerings, developing technologies, delivery mechanisms, enablement processes, business processes, and clients' risk assessments, et cetera, et cetera. So, and the identification of the accountable institution's risk tolerance level or appetite. So that was quite a bit of an amount of words, but ultimately what this is talking about is the entity-wide risk assessment. So you would determine the risk that your specific institution faces, and you would start by the national risk, the sector risk, and then the specific risk for your institution. So we're not going to be going into too much detail in that regard, but ultimately you start with your entity-wide risk assessment so that you can determine the risk that your institution faces, and then you would start drafting the RMCP. So once you have the risk your institution faces, then you describe or discuss the mitigation and management of risks through the compliance controls. So what are we talking about when we talk about the compliance controls? It is how do you combat the that specific risk by conducting customer due diligence. How do you report? How do you keep the records from CDD, so the identification and verification documentation? How do you screen your clients in terms of targeted financial sanctions? How do you determine the beneficial owner of your clients, et cetera, et cetera. Okay, and then part 3, the monitoring, whether the controls implemented are adequate and effective to mitigate and manage the risks as identified and assessed. So first, you conduct the risk assessment. I would actually recommend that you include in your RMCP the specific outcomes from that risk assessment, the risk assessment itself. There's no harm in actually including that in your RMCP. And then once you have determined that information, then you would discuss the controls. And lastly, how do you check up on those controls and making sure that you are still complying with the FIC Act. So ultimately, with regards to the controls, just keep in mind, we are talking about the specific FIC Act obligations and how do you implement that. That's pretty much what the controls are about. Okay, so PCC 53, that is the guidance product that the FIC published a little while ago. Please do keep in mind that PCC 53 needs to be updated just to reflect the General Laws Amendment Act amendments, so the GLAA. It just needs to be updated with regards to the targeted financial sanctions, for example, but there is a template in Annexure A at the end of the document. There is a template for how you would draft your RMCP, and you can certainly use it, but please keep in mind you need to tailor it for your specific institution. So there's been a few times when an institution was inspected and they were, for example, a law firm, but the RMCP is referring to the financial services that they provide. And ultimately, that would be deficient in terms of the RMCP. And I would also recommend that you don't use a boilerplate RMCP. It needs to be specific for your institution. And following on that, of course, your entity-wide risk assessment needs to be unique for your institution as well. That is why it's so important that you conduct an entity-wide risk assessment first. So Guidance Note 7A, it was published in February of this year. I would recommend that you take a look at that with regards to the entity-wide risk assessment. Okay, so the highest level of authority. So this is also covered in Guidance Note 7A, but the accountable institution's board of directors or senior management or the persons with the highest authority must approve the RMCP and ensure compliance by the accountable institution and its employees with the provisions of the FIC Act and its RMCP. So the obligation to approve the RMCP is with the highest authority of an accountable institution or the board of directors, and it cannot be delegated to other persons, groups of persons, or employees of that specific institution. So the reason why this is specifically mentioned is so that the board is aware of the RMCP and the implications thereof, and it's not ultimately directed to the compliance department, for example. And the second reason is, of course, the turn at the top of the institution. So the board of directors or the group with the highest level of authority needs to make sure that they are, in fact, complying with the FIC Act. But ultimately, that's why Guidance Note 7A is so important with regards to the RMCP and PCC 53. Okay, so when you are submitting your RMCP on GoML, you would log into GoML, click on My Org Details, and scroll down to the attachment section, click on Upload, and browse to where you saved your RMCP documents, and click on Open. and I would recommend that you submit the most recent RMCP that you have available. So keep in mind the FIC, hopefully this isn't the first time you've heard about this, but the RMCP sent out a notice in early March, where the due date was the 12th of March for accountable institutions that they supervise, of which CASPs are one of them, that they would need to submit their RMCP on GoAML. So if you haven't as of yet, I would strongly recommend that you submit that as soon as possible, as there are sanction implications. So do keep in mind that you upload your RMCP and that you upload it and make sure that it is the most recent one and that it has been processed. But we wouldn't confirm the content of the RMCP, but we will certainly confirm that it has been received. So the compliance officer needs to upload the RMCP for your institution as soon as possible. Okay, so once you have submitted your request, you will click on continue, and that is the last step in the RMCP submission to the FIC. So you would receive a SHREG number. I would recommend that you keep that SHREG number just for reference purposes as well. As I mentioned, with regards to the latest version on RMCP, and you can use that specific format of year, month, and date. Okay, so account monitoring. One of the benefits of CASPs is the technology that is at their disposal. So we are just going to be discussing with regards to the red flags to be considered and the red flags with regards to CASPs specifically as well. So just generally, where a client is reluctant or refuses to provide personal identification documents or information pertaining to purpose of transactions or source of funds. The client uses intermediaries who are not subject to adequate anti-money laundering laws. The client has a complex trust or company ownership structures. There's negative media reports on a client. So, for example, if they have been accused of corruption, involvement of a foreign jurisdiction with no apparent connection between the country and the client. So if they're asking for funds to be repatriated or a transaction to be concluded with a customer in another country, and you don't know the reason why for that, and clients for no apparent reason changing the details of transactions or their instructions to the CASP on short notice or in a manner that does not make economic sense. So, for example, if one of your customers, they accidentally deposit 150,000 Rand into your account and ask for an immediate refund, and they say that the funds deposited were by mistake, for example. So if you refund those funds, that is a relatively straightforward way to wash those funds to make them appear to be legitimate. Okay, so what are the specific risks and vulnerabilities in the crypto asset service provider industry? So the anonymous or pseudonymous purchase and sale of crypto assets, transactions based in a weak or high risk anti-money laundering, counter financing of terrorism, and counter proliferation financing geographical areas. CASPs are exposed to elements of risk which other accountable institutions may not experience. CASPs can be exposed to associations with elements of the dark web or with bad actors or criminals, with proceeds being derived from ransomware and other case studies. And CASPs are in a unique position in that they have access to all the addresses that are contained in the blockchain database. And if the address of a blockchain is associated with high-risk actors, such as known individuals associated with adverse media searches or with criminal elements, then subsequent transactions involved in that crypto asset might pose as a heightened risk, which is referred to as contagious risk. So one of the complexities of crypto asset service providers is that crypto assets are pretty much global in scale. But one of the benefits, and of course, crypto assets are known to be used in ransomware incidents or business email compromise, for example, or ransomware, that sort of thing. So, but one of the benefits of crypto assets is that you can, by looking at the on-chain, at the digital ledger, you can take a look at the previous wallets involved in the transactions, and the OFAC, so the Office of Foreign Assets Control, they are building a database with regards to the wallets that have been used in previous hacks or in previous illegal transactions. So, and there's also on the internet, there are quite a few databases in that regard as well, with regards to illicit proceeds, illegal proceeds being sent to specific wallet addresses and the incidents that are associated with those addresses. Okay, so secondary hops rather, that is the risk of previous owners or parties to the crypto asset is relevant to the current transaction. So that is the benefit in that you can look further down the line for the specific ledger. And so the one of the difficulties of secondary hops is that the person just before the transaction, they could be a money mule, for example. So it is recommended that you look further than just the previous wallet involved in the transaction, or previous address rather. Okay, so accountable institutions must monitor crypto asset transactions to identify suspicious and unusual activity. Accountable institutions are advised to develop red flag indicators, which highlight higher risk transactions and scenarios. So enhanced transactions monitoring should be conducted where higher risk transactions and scenarios are identified. Possible red flag indicators include anonymity characteristics of a crypto asset, transactions based in geographical areas with weak anti-money laundering, counter financing of terrorism, and counter proliferation financing, and transaction patterns are unusual. So most of these I have pretty much covered already, but of course for mixers and tumblers, if they have been used in the transaction or in previous transactions, then that would certainly be a red flag. Similarly to privacy coins as well, we don't have to go into too much detail in that regard, but privacy coins are also a potential flag as well. Okay, so rapid or unusual trading patterns, including frequent and rapid buy or sell orders within the short time frames that may suggest market manipulation, wash trading, or other suspicious trading activities. Transactions that have potential links to the dark web. Multiple transactions from the same clients over a short period of time, referred to as churning, which could be used to conceal the source of illegally obtained funds. And high frequency trading, as can be associated with attempts to exploit market inefficiencies or engage in manipulative trading practices. So especially in this industry as well, due to the almost immediate ability for crypto assets to be transferred to other addresses, that does allow for a whole bunch of transactions to be concluded within a very short time frame, which does make it difficult for in an attempt to obscure the origin of those funds. So if that is occurring from many to one or from one to many, then that can certainly be a cause of suspicion. So transactions that make no lawful business sense, that's pretty much covered earlier, and the beneficiary or originator client profile has unusual or high risk characteristics. Okay, so the value of the transactions are inconsistent with the client's declared source of income or wealth, particularly in that regard, the use of money mules, that's also going to be coming up I see a little bit down the line, down the slide, but it is certainly a characteristic of crypto assets. So if the client, for example, if they don't actually know much about crypto assets at all, but they are attempting to open an account and they have significant proceeds that they want to convert into crypto assets and want to transfer those funds immediately out, for example, then there's a possibility that they are being used as a money mule. Okay, so online gambling, where a client deposits small amounts to transact with, initiates some minor gambling transactions, and thereafter withdraws the funds. And once they withdraw those funds, they appear to be legitimate payouts from the online casino. So if they are receiving payments from online gambling casinos regularly, this could be a red flag. And certainly with regards to fake social media profiles that markets new crypto assets as being profitable or unique with the intention to lure clients away from legitimate CASPs, then the criminal misappropriates the fiat or crypto assets. And social media may be used to create crypto asset pyramid schemes, which make use of the same principles as the fiat pyramid schemes. Particularly on social media, so you would see, for example, a celebrity that is attempting to market that specific crypto asset, and the crypto asset address is published with fake promises of instant wealth, for example. That is certainly a red flag. Excuse me. So where crypto assets can be purchased through a crypto asset kiosk machine or an automated teller machine with cash without the clients having to open an account. So CASPs must conduct CDD on all of their clients. Unusually large transactions that are significantly larger than the average or usual transaction size, and the use of multiple accounts and transactions by the same individual or entity. This would indicate attempts to circumvent regulatory limits or conceal illicit activities. So I mentioned with regards to privacy-focused crypto assets, as they offer enhanced anonymity features, and while they're not inherently illicit, their use in suspicious transactions should raise concerns. So suspicious accounts access or activity involving multiple failed login attempts, account takeovers, or suspicious changes in account information, these may suggest unauthorized access attempts or compromised accounts. And so one of the compliance tools that are at CASP's disposal is with regards to geolocators, for example. So if the account is being hacked and the access to the account is being attempted in another country, for example, then that would certainly be cause of concern. So the source of crypto assets can be potentially tied or directly linked to illicit activity. And for example, funds may be transacted from a platform with little to no anti-money laundering or know your customer regulations in place, a possible red flag about the origin of funds. And similarly, a single crypto wallet can be tied to multiple banks and credit cards, denoting a group of people or singular person, excuse me, acting as mules and using one wallet to move funds around. So the FIC has published a report for financial crime insights on money mules. I would certainly suggest that you take a look at that. The link for it is on the slide itself. So terrorist financing risk. Crypto assets may be used to finance terrorism, owing to the decentralization and anonymity features of crypto assets. Illegal transactions cannot be regulated. So terrorist organizations may use crypto assets for the following three reasons. Crypto assets are generally characterized by the anonymity of transactions and the free cross-border flow of funds. So terrorists can easily conceal the source and location history of their funds. And terrorist organizations may use it to circumvent foreign exchange quotas and regulations on foreign exchange remittances abroad. So the identity of the crypto asset owner is encrypted in the crypto asset network, and people can only identify the source, flow, direction, and circulation mode of the crypto asset, with the identity of the crypto asset owner still being unknown. And thirdly, the convertibility of crypto assets allow terrorists to turn crypto assets into fiat currency. So the decentralized nature of crypto assets also provides for an opportunity for terrorists to escape bank and government supervision, which enables them to quickly transfer funds without formal financial institutions knowing. So certainly with regards to the determining the owner of the crypto asset and so forth, that information does get passed on to the law enforcement agencies, but it takes some time for the crypto assets to be traced. And ultimately, with those crypto assets being moved further and further away. So that is one of the difficulties with regards to crypto assets. So there have been known cases of terrorist organizations posting crypto asset wallet addresses, soliciting donations to their cause on social media, and with them posting their crypto asset crypto wallet address, and the public can donate to them directly, or they can pose as a non-profit organization. So that completely, of course, eliminates the financial institution being known, and it cuts out all the middlemen in the scenario. An account abruptly receives multiple payments from multiple different crypto assets, addresses or sources, and the crypto assets can be moved out of the account swiftly, especially if the account is newly created, dormant, or low on funds for some time. Then this would particularly raise flags. So as I mentioned a little bit earlier, with regards to many to one or one to many, if one specific address is receiving multiple payments from multiple different addresses, that could be a sign of either money laundering or terrorist financing, particularly if an institution is operating in a high conflict area, for example. So for the evasion of targeted financial sanctions, so sanction evasion is a characteristic of sanction evasion, is as ultimately, particularly in the last few years, that has become more of a problem, particularly with regards to geopolitical risk. So if politicians, for example, are placed on the UNSC, so the United Nations Security Council resolutions list, there are ways and means to avoid those sanctions entirely just by transacting on the dark web or on the illicit market or in crypto assets, as that is certainly an emerging risk in this area. So proliferation financing risk, this is certainly a risk as well. So due to high risk geographic countries being subject to financial sanctions, and with the globalized nature of crypto assets, the Democratic People's Republic of Korea has been known to use operators to gain access to CASPs and misappropriate crypto assets of other customers and use money laundering methods to funnel such misappropriated funds towards the proliferation financing program in the DPRK. So targeted financial sanctions are also used to combat proliferation financing. So CASPs should know how to access targeted financial sanctions list and determine where they are conducting business with individuals and institutions on such lists. So designated persons for proliferation financing appear on the targeted financial sanctions list, in addition to the terrorist financing list. So, for example, there was an example of where the DPRK was involved in crypto assets was when there was a platform that was ultimately hacked, and it was in the billions of dollars. I believe it was just last year. And ultimately, all the funds was moved over to the DPRK, and the platform that was used, it was in a Western country, and the customer, they were able to, or the hacker, they were able to open an account with a selfie, and they, as it was non-face-to-face, but there was no identification and verification, and before the accountable institution knew it, the funds were already repatriated to the DPRK. So that is why identification and verification is so important for this industry. So I'm now going to be transferring to my to my colleague, Victoria. Thank you for your time.
Thank you, Michael. I'm just going to switch on my camera. Yes. So my name is Victoria Nzana. I'm an assistant compliance officer at the FIC, and I'm just going to take you through different types of reports you can make in terms of the FIC Act, or different reporting obligations you have as an accountable institution in terms of the FIC Act. So here we have an overview of the different obligations. You have your Section 28 reports, which are your cash threshold reports, your Section 28A, your terrorist property reports, your Section 29, your suspicious and unusual reports, and your Section 31 international fund transfer reports. So just as a note, as a crypto asset service provider, you're not obligated to submit an international fund transfer report. It's only for a certain type of accountable institution. If you are also a crypto asset service provider and you fall under those specific categories, then you would have that obligation. So if you would like some material in terms of guidance for Section 28 reports, you can just refer to Guidance Note 5B, which is on cash threshold reporting. So this obligation is triggered when you as an accountable institution receive cash or pay cash to your client to the value of over 49,999 rands 99 cents. So this is specifically referring to cash, coins, paper money, and traveler's checks, not EFT. And just in your RMCP as well, just make sure that you highlight even the reporting timelines to say if you ever receive a cash payment or you pay your client cash, you will report as soon as possible, or no later than 3 business days from when it happens. And then just to transition to another type of report, just note that unlike your Section 28 reports, suspicious and unusual reports do not have a monetary threshold. So if you deem a transaction to be suspicious, no matter the money that is involved in that transaction, you are obligated to submit a report with the same time. Unlike with the CTR, where it only pertains to a certain monetary threshold. And just note that where foreign currency forms part of the cash transaction, this requires the completion of a cash threshold report. An accountable institution would have to refer to the exchange rate at the time of the transaction to calculate the amount of money in South African rands. So if you have to make a CTR and you were transacting with foreign currency, just take note of that. And just also, when you are submitting any report to the center, provide as much information as possible relating to that activity or to that transaction. This helps our analysis team to analyze reports and compile intelligence reports. So if your report is limited in its information, it hampers our ability to analyze the transaction or the activity which you are reporting. And you will find this requirement in our money laundering and terrorist financing control regulations, which outlines the minimal client information and transactional data, which is to be reported when submitting a regulatory report to the center. And this is not information that you wouldn't have on hand. This is information that you would have obtained as you were onboarding your client, when you were identifying and verifying the identity of your client. So when you were fulfilling your customer due diligence obligation, you would have established the client's ID number, their name, their and some of the additional information which you will provide in the report. As explained, you will have the reporting timelines in your RMCP to make sure that you don't omit submitting the report over the due date, as that is an offense in terms of the FIC Act. And then moving on to Section 29 reports, these are your suspicious and unusual reports or your terrorist financing reports. So you will choose the appropriate report depending on the nature of your suspicion. So if your suspicion relates to terrorist financing, so if you suspect that you are party to a transaction which facilitated terrorist financing, so perhaps you aided a person that is indeed working for a terrorist organization and you suspect this to be true, then you should submit a terrorist financing report to the center. The distinction between a transaction report and an activity report is that with transaction reports, the transaction would have to have happened. So if the transaction has already happened, you would send a transaction report. And if the transaction has not taken place, you would send an activity report to the center. And just to highlight a few common errors on GoAML that we've identified with accountable institutions is that there's non-adherence to defined reporting timelines. So to prevent this, ensure that this is part of your training and it's also detailed in your RMCP. Not all products and services are identified. Reports are not completed in full. There's missing client or transaction information. So say, for example, you are reporting a transaction you deem to be suspicious. And the reason that you provide for the suspicion is the client paid in cash. You should explain, what about the client paying in cash do you deem to be suspicious? What about this transaction raised suspicion? And you should tell this to the center to inform our analysis of your report. Another error is that reports are not being checked before being submitted to the FIC. Reports are not all reportable events. Not all reportable events are identified, and rejected reports are not remediated. So if you get a rejection, just ensure that you remediate and you don't submit a completely new report, as this would be a duplication. Just a overview and also a guidance product. If you would like further guidance on Section 29 reports, just have a look at Guidance Note 4B, which explains that the nature of the suspicion that you're reporting should relate to financial crime and not criminal activity in general. So if you suspect that the business was party to a transaction or an attempt to transact, there was an attempt to transact with your entity, and this is of a suspicious nature, and it relates to financial crime, it relates to terrorist financing, or relates to sanction evasion, you may submit a Section 29 report with the center. And in relation to the what has to happen for you to know that this is reportable to the center? A person must file a Section 29 report when that person knows or to reasonably have known or suspected that a transaction or activity relates to proceeds of unlawful activity, facilitates the transfer of proceeds of unlawful activity, has no apparent business or lawful purpose, may be relevant to the investigation of an evasion or attempted evasion of a duty to pay tax or attempted tax evasion. And all of this you can find in Section 29 of the FIC Act, as well as Guidance Note 4B. Another reason to submit a suspicious and unusual report to the center is where you are unable to conduct customer due diligence. So as a requirement as an accountable institution is that you're not allowed to do business with an anonymous client or a client with an apparent fictitious name. So in ensuring that you know who you're doing business with, you would identify and verify the identity of your client. Should you be unable to establish and verify the identity of your client and other relevant persons in terms of your RMCP, or be unable to obtain information about the business relationship with your client in terms of your RMCP, or that you're unable to conduct ongoing due diligence with your client in terms of your RMCP, you should submit a Section 29 report with the center. And in relation to an STR, so you have your transaction reports and your activity reports. With a transaction report, it's in respect of complete transactions or series of transactions which are of a suspicious nature, which relates to suspicion or knowledge of the proceeds of unlawful activity, money laundering, or regarding a transaction or series of transactions relating to a contravention of the targeted financial sanctions prohibitions. And in relation to activity, it's when the transaction has not taken place. So when there's an attempt to transact with your business and the transaction is unsuccessful, but it's still suspicious, you would then report to the center. I'm just going to hand over to our MC for the following slide. Thank you.
Perfect. Thank you so much, Victoria. So yes, I would just hop in here as this is quite a lot of information. So ultimately, if you are aware of an institution or one of your customers is bribing an official in an overseas country to solicit their business, then you would need to report the bribery to the DPCI, so the Department of Priority Crimes, or the SAPS, South African Police Service, and please could you report to the FIC as well in terms of the STR or SAR function. The reason for this is that we are a signatory of the OECD treaty in terms of international law, and we do not want to become a country that become associated with corrupt activity. So if you are aware of a business that is ultimately bribing public officials in their countries, then please can you report that to the SAPS. Thank you.
Thank you for that. Yes. And then as explained, let's say, for example, just to give a practical example for a suspicious activity report. So say, for example, a client comes into your business and they want to transact with you. So they want crypto assets, or they want a certain product that you're offering. And upon realizing that you require verification of their identity and you request certain documents from them, they no longer want to do business with you just for that reason, and you perceive that to be suspicious or unusual, then you may submit a suspicious activity report because you haven't transacted with the person, but an attempt was made or inquiries were made, but a transaction has not yet been concluded. Similarly, with a terrorist financing activity report, so where there's an activity which does not involve a transaction between two or more parties in respect to a transaction or series of transactions about which inquiries are made but has not been concluded, and this includes cancelled transactions or interrupted transactions, then you would submit a terrorist financing activity report. And this is just an overview. Just make sure that you complete the attendance register, because we will be sending you these slides for your perusal when the webinar is complete. And then what are the implications of filing a Section 29 report? Section 33 of the FIC Act says that as a reporter, you may continue to carry out the transaction unless the FIC directs you to not proceed with the transaction. So say you report the individual, you may continue to transact with that entity or that natural person unless we direct you not to in terms of Section 34 of the Act. And that direction will be for a period of 10 days. So it will be for a specific period of time. And also something to note is that you may not inform the person that you are reporting, or anyone for that matter, who is associated with the reported transaction that you're reporting, that you have submitted this report to the center. You may not inform them of the contents of this report, as it is an offense in terms of the FIC Act. And then in terms of Section 29, you must report to the center as soon as possible, and no later than 15 days after you are aware of certain facts which should give rise to a suspicion. So you're aware of a certain fact, and as an institution, you conduct maybe an internal investigation to figure out the basis of your suspicion. With that information, you would then relay it to the center in terms of a report in line with Section 29 of the FIC Act. With that, I'll just hand it over to a member of our data systems team. Thank you.
Yes, before Kalani starts, please can you complete the attendance register? We have posted the link in the chat box. So according to our records, only approximately half the people have completed it. So please can you complete it as soon as possible while Kalani is setting up. If you could please complete it now, it would be greatly appreciated. Thanks.
Did you? Good morning once again, ladies and gentlemen. As my colleague introduced me, my name is Kulani Ngobeni, and I'm with the Data Systems and Reporting team here at the FIC under the Compliance and Prevention Business Unit. I will not be showing my face throughout the entirety of the presentation, so I'm just gonna quickly disable that. Okay, so looking at the report submission process for Section 29 reports, right? So when an institution is filing a report in terms of Section 29, that would be your STRs, SARs. They're not included here, but we also have your TFTRs and TFARs. So you need to note that all mandatory information, such as the reason for reporting, as well as the action fields, as well as client information has to be filled out. So in some cases, this information is omitted simply because on the reporting form, we currently have not made provision on GoML to indicate that those are mandatory fields. However, if you do leave those fields incomplete, the report will be rejected, right? Also, STRs are reported with a series of transactions summarized. So when completing your Section 29 reports, please specify or do not summarize any details. I believe the fields make provision for you to to put down as much information as you possibly can on the reporting form, right? Also, accountable institutions need to provide the detailed descriptions of or narratives in both the reasons as well as the action fields, right? And lastly, so the free text fields should not be used to insert data that ought to be captured in the other fields on the SARs or STR forms. So, for instance, do not put down the reason for reporting under the comment field or the action for reporting under those fields. Rather, put the information where it's relevant on the reporting form. Right. So this illustration is just the life cycle of a regulatory report, what triggers an institution to submit a report to the FIC, what we do with those reports after. So firstly, as an institution, if you have an instance to report, you would have to identify a risk or a trigger, right? So this would be the reason for reporting. And if you deem that instance significant enough to be reported, you will then commence your internal processes as an institution and then decide whether that situation warrants for report submission to the FIC, right? Once you've completed your internal processes, then you will generate a statutory report via the GoML channel and submit it to the FIC. Once we've received that report as the FIC, we will then start our own internal processes. So this may include making referrals or requests on the reported incident to further investigate of whether we need to escalate that matter or not, right? We may refer to the SARS for instance, or the NPA or other law enforcement agencies that will further take the matter up on a legal level, right? So that's basically what the life cycle entails on high level, right? So some reporting areas we've identified with regards to cash threshold reports or CTRs is that cash deposits into bank accounts are not always accounted for. So a cash deposit would that exceeds the prescribed threshold of 50,000 rand has to be reported as a cash threshold report, right? Also, cash threshold reports submitted on electronic funds transfer transactions, those do not account for as CTRs. CT reporting reportable instances. We do not look at EFTs as cash transactions, right? Also, transactional reports are submitted with both parties of the transaction marked as my client on the reporting form. So on the reporting form, when selecting the bi-party relationship, we refer to this as the bi-party relationship. At least one of the parties has to be my client, meaning to say the full client's details have to be completed on that section. If you select both relationships as not my client, the report will be rejected because we expect you to have somewhat some details of the person or the entity you are submitting, or account rather, you are reporting to have some details regarding that, right? So you need to put down one of the parties as my client on the reporting form, else if you have submitted as both not my client, then the report will be rejected, right? Also, all transactions are bi-party transactions with a from or a sender and a to or receiver side, and one of the sides must be my client. So this is the point I was making, not to just now, right? Also, cash threshold reports submitted with a series of transactions summarized. As I mentioned a bit earlier on, please do not summarize any information, be it a transaction or an activity that you may be reporting. Put down as much information as you possibly can, right? Also note or be wary of submitting transactions with the same transaction numbers, right? Because in that case, or in that instance, those transactions will be rejected. Each transaction is expected, each reported transaction is expected to have its unique transaction number. And lastly, mandatory information sets such as the SWIFT code, client ID, or the passport number, and transaction mode, or the fund types, often omitted in these report types, in the CTR report type, right? So we advise that you use the cash received by accountable institution type code, or the cash paid by accountable institution type code. So as you would know, as you're aware, we are currently in the process of upgrading the GoAML platform, and with the new version, it will make provision for you to only be able to select these funds type codes, right? So with the current version, you can see all the different funds codes that are available on GoAML, but with the new version, then when selecting a CTR, you will only be able to see the fund code types that are specific to the CTR. Right. So basic information that is required when you're submitting a report. Obviously, for a transaction to take place, two parties have to be involved. That can either be the payer or the receiver of funds. Also, the type of party can either be a natural person, an institution, or an account. So for a transaction, one of the parties, like I said, has to be my client, which means that the full details of that particular client must be provided. Right. So in reporting transactions as well as activities, then the full details of that transaction has to be reported. For instance, the amount as well as the transaction date, and lastly, the transaction location where exactly the transaction took place, be it at the branch or be it at the bank, whatever the case may be. Then you need to be able to specify that information. When reporting an activity, then the full details of that specific activity have to be reported. So you need to be able to specify the date which the activity took place, as well as what exactly transpired, right? And if there are any goods or services involved, please do specify those in the provided fields of the reporting form. Okay, so this is basically just an illustration of the relationship between a person, an entity, and account when a transaction takes place. Like I mentioned, the relationship can either be between an individual, an entity, or an account. So I'm not going to go through the entirety of this illustration. So just as an example, let's say a cash payment is being deposited into a business account, right? So in this case, the person depositing the amount, the cash amount, will refer to them as entity A, and the account that the money is going into will be referred to as entity B in this example. So obviously, the minimum information needed to report, we will need entity A's information. So the conductor of the transaction, the person who's depositing the funds, we need to know their details. Firstly, if you have their ID, you need to specify that on the reporting form, their address, as well as telephone number, right? If they are depositing that money on behalf of an institution, we also need to know the institution's name, the registration number of that institution, the address of that institution, the telephone number, as well as the person who owns the institution, or the director of the institution, right? We also need to know the information relating to the account that the funds are going into, right? So entity B's details, we would need to know the account information, the institution name that would be the bank that the funds are going to, the account number, the financial institution, the branch, the funds are being deposited into, as well as the currency code, right? also need to know on entities B side, we need to know the institution's details as well as the signatory of the person who received the funds, right? So when reporting on GoML, then of course you need to specify, as per the above example, the source and destination of funds from entity A going into the account, the my client and not my client relationship, is entity A your client or not? If they're not your client in this case, you would have to select not my client. And you will see once you've selected this option, it will show, you will see that it will show on the reporting form that there will be certain information that will not be mandatory, seeing how you have selected a not my client relationship. So meaning to say the minimal details will then be required, for instance, the amount that was deposited into the account. And of course, the business account that the funds went into. In this particular example, it would be your client. So both ends in this example would be your client, right? When you're reporting the bi-party relationship. And another thing, please save your reports regularly before submission. You are required to do this to ensure that all the information you have captured on the reporting form is correct and you have not omitted any other details, right? So you can still save the report and complete it at a later stage if you wish to, just as long as you stick to the reporting timelines, and attach any supporting documentation if you have any. We've seen instances where institutions would submit reports and maybe forget to attach maybe any kinds of receipts they may have to support the report, and would want to come back and re-upload those. So if the report has been successfully submitted or successfully processed on GoML, you will not be able to make changes to it. So what you'll need to do is to submit an entirely new report, right? And reference the previous report's reference number or report ID in that case. Also, once you've completed your report, please remember to click on submit so that the report can go through. Once you've done that, monitor the message board for any report receipts to track whether the specific report has been submitted, has successfully accepted or rejected. Right. So these are some examples of Section 29 indicators. So when reporting an STR, a SAR, TFTR, or TFAR, you will have a variety of options to select depending on the specific instance you would be reporting. You would need to select the ones that apply to the instance you would be reporting. So these are readily available on the Section 29 reports, reporting pages. So you would need to select the ones that are specific to the instance you would be reporting. You are not limited to only one. You can select multiple if you wish to, just as long as you specify the nature of the instance you would be reporting, right? So general recommendations when submitting a report in terms of Section 29. As an institution, when you decide to file a report, you need to be able to answer to the following questions. We refer to these as the 5 W's and 1H. The first one being the why you're filing the report. So why do you feel uneasy or find that particular instance or situation unusual that it prompted you to report, right? So you would need to identify these under the reason for reporting field. So this would be the first field under the reporting form. Secondly, the what. So what caused you to submit the report, right? So what were the red flags? So the in Section 29 indicators need to be specified, essentially. Thirdly, how did that specific instance, be it a transaction or activity, occur? So you need to be able to list the specific modus operandi, the behaviors, as well as the transaction modes involved, right? And then when? So when the timelines, when did the transaction or activity or the suspicion occur, right? So was it a once-off, or is it a series of transactions or events that are involved, right? And then who the parties that are involved. Was it an account? Was it an NCC, or was it just an individual, right? So you need to be able to specify that. And lastly, where did this suspicious activity or transaction take place? Was it at the institution's premises? Was it at the bank? You need to be able to speak to that information as well. Right. So when filing a Section 28A report in terms of the FIC Act, so this would be when you're filing a terrorist property report, you need to not be able to note the following, right? So as an accountable institution, you need to conduct ongoing screening of clients against the targeted financial sanctions list during onboarding, as well as for your existing clients, right? So client screening should be concluded before you accept any funds into the institution's account, right? And or concluding a transaction with the prospective client. Also, accountable institutions need to screen their clients at set or predefined intervals, which would be documented in the risk management and compliance program in your RMCP. Also, targeted financial sanctions. The targeted financial sanctions list is readily available on the FIC's website. You can always access it on there. It's free of charge. We advise you to, instead of downloading the list, we advise you to search for the institution or the person you would be searching for in real time. So there is a functionality that allows you to do that. The reason why I'm saying this is because you might find that today you're searching for an individual and they're not on the list, only to find that a few hours later they are added on the list. So if you download a list and keep it somewhere, you will not be able to see the most recent updates made to that list. Right. Or alternatively, some institutions make use of third-party services for sanctions watch as well as screening their clients. Right. So normally these third-party systems are paid for. However, with the FIC, we offering you the service for free. Right. Okay, and some reporting feedback I have for you today is that firstly, all reports have to be submitted via GoML. So we've had or seen instances where institutions would want to submit their reports via the PQP channel, or they would want to come to the FIC's offices and submit handwritten reports. So back in the day, of course, that's there was a similar process where you would have to fax your reports and all that. But with the advancement of technology, we've made provision for you to do that at any location or wherever you may wish to file your reports at. So you need to know that all reports have to be submitted via GoML. So we do not allow any other submission mode, right? So you have to submit your reports on GoML. And another thing, users are expected to log on to the GoML system using their own credentials in order to submit reports, right? So the sharing of logon credentials is not strictly prohibited. And another thing, please ensure that the correct report type is selected. You may find that you wanted to report a suspicious activity. However, you end up selecting a suspicious transaction. The report types are completely different, are structured differently. So you need to be aware of that as well. Also ensure that reports are submitted under the correct branch. So if you have a delegation structure established, please ensure that you select the correct branch when reporting. And also an emphasis on completing your reports as comprehensively as possible. Do not summarize any details on the reporting form. Just put down everything you have gathered, right? Also, reports have to be reviewed before submission. Like I said, you can save your reports before submitting them, and they will be stored in the drafted reports menu on GoML, and that's where you'll be able to access them. Because once you've submitted the report and it gets processed on our end, you will not be able to retrieve or make any changes to it, right? And lastly, once you've done so, once you've submitted your report, monitor the message board constantly for any report receipts. Okay, so looking at drafted reports, as I mentioned, you are able to save your reports before submitting them, and you will be able to find these reports under the drafted reports menu under not submitted web reports. So this also applies to rejected reports as well that have been reverted. You will be able to find them under this menu, right? So we also urge you to monitor this the drafted reports tab as constantly as possible, regularly, because you may find that you have incomplete work on there, right? So in looking at the remediation process for rejected reports, you need to be aware that all rejected reports have to be remediated, right? So on the message board or under submitted reports, you will be able to see the exact reason why the report was rejected, right? And you, as an institution, are expected to remediate that report as per the specified rejection reason, right? So if you click on the rejected report, rejected status, that's highlighted in blue, you will see the reason for rejection. It will also give you the option to revert that report. Once you click on revert, that report will go back to the drafted reports tab under the not submitted web reports. There you will be able to edit the report and make the relevant changes to the report and resubmit it to the FIC, right? So if a report has been rejected, I believe my colleague did touch base on this a bit earlier on, you are not to submit an entirely new report, because the originally rejected one will just remain on the system unresolved, right? So there are user guides that are really available to assist you in this process. Right. So recommendations for record keeping: as an accountable institution, you are advised to have an adequate record management process in place. So we recommend that all accountable institutions keep copies of all submitted reports, the messages, report receipts, and requests for information in your internal systems, right? So this also applies to reports. Once the report has been successfully processed on the on GoML, you will be able to download it for record keeping purposes. So you need to download your reports and keep copies of them within 30 days of the report being successfully processed, because after 30 days, then that report will be archived and you will not be able to access it. So please keep that in mind. And also, just emphasis on the rejected reports part, please ensure that you remediate all your rejected reports. Right. So these are some documents that will assist you in the report submission process for the different report types, as well as the registration process in cases where you'd want to update your institution's details or make any other changes to the institution's profile, right? So these documents are readily available on GoML as well as the FIC's official website, right? So before we look at the risk and compliance return section, I would just like to address one question that was raised a bit earlier into the presentation, where somebody was asking how they can establish a delegation structure or register multiple institutions on their profile. So what you will need to do is to log on to GoML. So you would need to use if you're delegating an institution, you would need to log in using the main institution's details, right? And if you already have a delegation structure established, this will be your view. Before you log in, you will have an option to select the institution that you would like to log into. So seeing how we want to look at the main institutions or the head branch of the institutions, or would want to delegate from there, you would need to select that specific one. Once you've done that, you will navigate to the admin tab and go to active organizations right there at the end. Once it's loaded, you will be able to see all your institutions that are registered on GoAML. Currently, for this profile, we only have 2. And as you can see, with the one that has the org ID 526, it's delegated to 510, which is the one just below it, right? And if you want to add another one to the delegation, you can just go to create. You can just select create new delegating organization. If you click that, it will generate a registration form, and you would need to complete that as per the normal registration process on GoAML. Once you've filled out all the details, you'll need to attach the authorization letter as well as a clear ID document. However, in this case, the authorization letter would have to contain information on how the institutions are related, right? So you need to specify that information on the authorization letter. Once you've completed the registration form, you just submit the request, and it will be processed accordingly. So that's how you go about creating a delegation structure on GoAML. Thank you so much for your time. I'm going to hand over back to my colleague to take you through the RCR process.
Thank you for that, Kulani. I'll just take you through the obligation to submit a risk and compliance return in terms of Directive 6 and 7. So the FIC has issued Directive 6 and 7 to require certain accountable institutions, which we refer to as designated non-financial businesses and professionals. These are the accountable institutions which the FIC supervises, and we just wanted to find out certain risks which are posed to these accountable institutions. So in order to better understand their money laundering, terrorist financing, and proliferation financing risks, we required them to submit a risk and compliance return questionnaire. And with this information, the FIC uses a risk rating tool to analyze the data and to identify higher risk institutions as a basis for risk-based supervision. So even in our supervisory approach, we take into consideration the risks per the different sectors. So as a crypto asset service provider, you are required to submit a risk and compliance return in terms of Directive 7. So if you have not submitted your risk and compliance return, please make sure that you submit it immediately, because this is the directives of the center are authoritative in nature, so they need to be complied with by accountable institutions. So how do you access this risk and compliance return? So first you would go on the FIC homepage, and you would navigate to the right side of the page, sorry, and you'll see a banner that says file your 2023 risk and compliance return today. Also, if you receive the slides, you'll be able to just click directly on the link provided below. It will take you to this page. On this page, you will select Complete Directive 7. That's if you haven't submitted already, and then you will provide you will complete the questionnaire. Just make sure that you are registered before you complete the questionnaire, because it's going to ask you for your org ID number, which is a number that's issued to you upon registering as an accountable institution with the center. And should you want to read the questions beforehand, just to get an idea of what the questionnaire looks like, you will see at the bottom there's a link that says download a sample of the RCR questionnaire. And the sample will look like this, wherein you'll be able to view the questions beforehand, just to better prepare yourself ahead of submitting the actual questionnaire. And when you're done, you'll get a completion message, and just take a screenshot of that thank you message as part of your record keeping internally. So in closing, this is just a summary of some of the obligations that we discussed today in the webinar and the relating section of the FIC Act. There's also guidance and directives, as well as public compliance communications for your perusal. With that, we're just going to go to our Q&A. Thank you.
Perfect. Thank you, Victoria. And so, yes, thank you for your time, everybody. Before we jump into the Q&A, if everyone can please complete the attendance register, and if you can complete the survey. So if you complete the attendance register, we will provide a copy of the slides to you. So hopefully over the course of today, you've seen that the reason why we have webinars such as these is that the accountable institutions can identify suspicious activity, submit a suspicious and unusual transaction report to the FIC, and of course the other reports as well. But the STR and SAR is certainly the one that is incredibly important, and we collect that information and we submit that through to the law enforcement agencies so that they can, for prosecution and ultimately conviction. So, and you need to identify and verify your clients before you can submit those reports to the FIC. So I thought I'd just mention that with regards to the big picture. And the processes are reflected in your RMCP in case the compliance officer, for example, is leaving the institution, so that these processes are in place and the regulatory bodies can determine how you conduct your compliance controls. Okay, so with regards to the questions, we only at this stage have 1 or 2 questions. So we are just going to give 5 minutes for you to please, before you log off, please complete the attendance register. Please complete the survey, and if you have any questions at this stage, please feel free to answer them now, to ask them now rather. We will start with the questions at 25 to 12. Thanks. Okay, great. Thank you for your time, everybody. So I see there aren't any new questions. If there aren't any new questions, we will close a little bit early, and you can have the 25 minutes back. Just before we close, I'm just going to quickly post the link for submitting a compliance query. So it is, if you have any queries in the future, or what you're going to ask possibly slipped your mind, please do not hesitate to submit a compliance query, or you can call us on 012-640-6000. So thank you for your time today, everybody. I hope today was informative, and remember to keep warm. Thank you. Bye-bye.